They have two updates or two stocks which have been recommended by the TradeBrains portal website. It is about two stocks that they see an upside potential in the near future. One of them is NMDC with a target price of 83, currently trading at about 69 rupees. And the second stock is Power Finance Corporation Limited, current price 415, almost an upside of 23% for a time frame of 12 months. So we look at NMDC first. They have recommended two dividend paying stocks. One of them is a metal and mining sector. Another one is from the financial services sector. This has been updated by TradeBrains portal. NMDC 12-month target upside of 20%. Established in 1958, is the leading, largest, and major iron ore producer headquartered in Hyderabad. Operates four mechanized mines: Bailadila iron ore mines, Kirandul complex, then mine Bacheli complex in Chhattisgarh, Donimalai iron ore mine, and Kumaraswamy iron ore mine in Karnataka. Sorry, besides iron ore, NMDC is the only organized diamond producer in India, extracting from the Majgwan mine in Panna, Madhya Pradesh. FY25 marks the beginning of a 4 to 5 year plan to double capacity from 50 metric tons to 100 metric tons. The company acquired 1,167 acres from RINL near Gangavaram port for 1,500 crores as a key part of the 100 metric ton expansion plan. Q2 FY26, around 43,000 crore worth of projects at various stages of implementation, and additional rupees 31 to 32,000 crores of projects under construction, including two major slurry pipelines, Kirandul, Bacheli, and Nagar, Nagarar, Vizag, costing around 20,000 crores combined. So the risk factors for this company are the company remains vulnerable to the cyclic cyclic capacity or the cycle of business of steel, as iron ore is a key raw material for steel production. Therefore, NMDC's volume and profitability may suffer from any drop in the steel sector demand. So, is a business cycle related demand and supply. When the business cycle is in top gear or is in a good demand, then only the demand for steel would be there, and therefore the company could get good price for its products. If there is no demand, then again pricing of the product would be affected. So there would be swings in demand and declining iron ore prices, particularly in the global market, would encourage steel companies in India to import and put pressure on the domestic supply and prices. So, apart from the demand cycle supply, there is other mechanism of reducing iron ore prices internationally, which could lead the steel producing companies to import the raw material from the international market, and that will put pressure on the domestic supply and prices, indirectly impacting the margins and the profitability of the company. So there is a twofold risk factor there. Then Power Finance Corporation sorry, is a Maharana CPSC and a leading non-banking financial company in the country. PFC is the largest NBFC by net worth, holds 20% of the market share. The company offers a variety of goods and services that meet the needs of the power industry, including short-term and the long-term loans, equity, lease finance, and transitional financing from a range of power products in transmission, distribution, and generation sectors. PFC surpassed rupees 5 billion in loan assets with its renewable portfolio, more than doubling over the last 5 years. In FY25, the company reported a profit after tax of 30,514 crores, a 15% increase from the previous year. The group loan asset book exceeded 11 lakh crore, growing by 12%. The net NPA ratio for FY25 is 0.38% compared to 0.85% in FY24. PFC's net worth reached 90,937 crore as of 31st March 2025, reflecting a noticeable 15 year-on-year increase. The Sinnar thermal power project, with an outstanding amount of 3,000 crores, sorry, is a 1,350 megawatt coal-based plant being resolved under NCLT and is in India Power Haldia, which has an outstanding amount of 959 crores and is also a 450 megawatt coal-based plant under NCLT. So, a risk factor, possible potential concentration risk to its significant exposure to the power sector, particularly to the financially stressed power utilities, which could lead to higher non-performing assets NPAs. So, the high amount of borrowing, particularly to the power sector companies, which could add, more NPA assets to its portfolio, which could lead to losses and something that would affect the overall profitability of the company and the financial assets in the long run. So, important disclaimer. Additionally, fluctuating interest rates and foreign exchange rates can impact borrowing costs and profitability as well. So, two-factor risk here as well. The article cum information has been extracted from different resources on the internet. All investment opinions and recommendations mentioned are solely of the respective experts, broking houses, rating agencies. These do not reflect any personal opinion or advice. Stock market investments carry inherent risk of financial loss. Investors must exercise their own judgment and conduct proper due diligence. The author bears no responsibility for any losses resulting from the decisions made based on this article. Please consult a financial advisor or expert before making any investment decisions. So this is the logo of the NMDC, sorry. Current price. This is 1 month return, 6 months return, 1 year negative return of 18%. And this is how the current financial standing of the company. Face value 160,558 crores, 85 is the high, 69 is the current price. Earnings to ratio of price 9.27, book value 33.8. The company is trading two times its book value. 3.5% is the dividend yield. Return on equity is 23%. Return on capital employed is 29%. Good return on equity of the last 3 years of 23%. Debtor days have increased, which is a concern. You can see revenue has been consistently growing in the last 1 year, which is a good positive sign. However, there has been a fluctuation in the net profit in terms of the amount of net profit the company's made. We'll now look at Power Finance Corporation of India. Uh, I think it's Power Finance Corporation, right? Let me just quickly check the complete name. Yeah, Power Finance Corporation. So that is the current price. This is the logo of the company. 6 month return minus 7.5, then 1 year return 22%. 1,36,000 crore capital, 10 rupees is the face value, 21% return on equity, 9% return on capital, dividend yield 3.83%, book value 357. So company is trading at 1.2 times its book value, price to earnings ratio of 6, which is very good. Good dividend yield of 3.79%, healthy maintenance of dividend 22.4%, low interest coverage ratio, poor sales growth of 11.4%, capitalizing interest costs, 10% revenue growth in the last quarter, good almost 18% revenue growth in the last, 17% revenue growth in the last 2 quarters. Net profit almost 15% increase in the last, you can say in the last 6 months, and overall 18% in the last 1 year. So overall, thanks for watching, friends. We'll connect with another video soon. Please share this with your friends, family, and associates so they could all benefit from this information. Thank you for watching the video. Have a lovely weekend.